Welcome to Fintech's Fair Play, where we analyze the most significant developments in the fintech industry. Today, we're examining a high-stakes regulatory battle that will reshape the future of digital banking and payment systems in the UK. Revolut, the digital banking powerhouse, has joined forces with global payments giant Visa to challenge the UK Payment Systems Regulator's proposed cap on interchange fees for cross-border transactions. This isn't just another corporate dispute with regulators. This battle strikes at the heart of how modern payment ecosystems function and will have far-reaching implications for the entire fintech landscape. Let's break down what's happening and why it matters. Interchange fees are the charges that merchants' banks pay to customers' banks every time a card payment is processed. These fees are a crucial revenue stream for many financial institutions and fund everything from rewards programs to fraud prevention systems. The UK Payment Systems Regulator, or PSR, has proposed implementing a cap on these fees, particularly for cross-border transactions. Their argument is straightforward. These fees are excessive and place an unfair burden on businesses, especially smaller merchants who have less negotiating power. When announcing their proposal, the PSR specifically noted that both Visa and MasterCard had increased interchange fees for online transactions between the EU and UK to 1.15% for debit cards and 1.5% for credit cards after Brexit. The regulator's managing director at the time, Chris Hemsley, stated clearly, "In this market review, we have provisionally found that the fees charged by MasterCard and Visa to UK businesses which accept payments from within the EEA are likely too high." In short, at this stage, we do not think this market is working well. Revolut and Visa, however, see things very differently. They've now filed separate legal challenges against the PSR's decision. Revolut's position, as reported by the Financial Times, is unequivocal. "We disagree with the PSR's assessment and believe it has acted beyond its statutory powers in imposing these caps. We have therefore requested the court to review and ultimately overturn the PSR's decision." Visa, meanwhile, frames its challenge as a matter of proper procedure, stating, "We respect the PSR's role as an economic regulator. This narrow legal action is focused only on the PSR's legal authorization and process related to price setting to ensure a fair and thorough process and give clarity to the industry. This is critical to future growth and investment in the UK." But what's really at stake here? Let's analyze the arguments from both sides. Revolut and Visa contend that capping interchange fees will harm the very consumers the regulator aims to protect. Their reasoning has several dimensions. First, they argue that lower interchange revenue will force financial institutions to compensate by cutting valuable customer benefits like rewards programs or introducing new fees elsewhere. Second, they demonstrate that reduced interchange revenue will stifle innovation by limiting the funds available for developing new technologies and services. For high-growth fintech companies like Revolut, this will slow expansion and product development. Third, they position this as a matter of regulatory overreach, questioning whether the PSR has properly considered the full market implications or if they even have the statutory authority to impose such caps. The regulator, on the other hand, maintains that the current interchange fee structure is fundamentally imbalanced. They argue that these fees have risen without sufficient justification, particularly after Brexit removed the EU's existing interchange fee caps from applying to UK-EU transactions. The PSR believes that by bringing these fees down, they'll create a more competitive marketplace where costs are lower for merchants, who would then pass those savings on to consumers through lower prices. This dispute highlights a fundamental tension in fintech regulation: how to balance consumer protection and market fairness with the need for innovation and sustainable business models. For Revolut specifically, this battle comes at a critical time in its evolution. As one of Europe's most valuable fintech companies, it has been aggressively expanding its product offerings and global footprint. Any significant reduction in interchange revenue will impact its growth strategy. Industry analysts are closely watching this case, as its outcome will set important precedents for how digital payment systems are regulated not just in the UK, but potentially in other markets as well. If Revolut and Visa succeed, it will preserve the current revenue model for card issuers and payment providers. If they fail, the entire payment ecosystem will need to adapt to a new economic reality. Either way, this case demonstrates the complex challenges facing regulators as they try to oversee rapidly evolving financial technologies and business models. Traditional regulatory frameworks were not designed with digital banking in mind, and finding the right balance between innovation and consumer protection remains an ongoing challenge. As this legal battle unfolds, it will raise important questions about the future of payment systems, the relationship between traditional financial infrastructure and digital innovators, and ultimately how value should be distributed among the various participants in the payment ecosystem. For merchants, consumers, investors, and anyone interested in the future of fintech, this is a dispute worth watching closely. That's our analysis of the Revolut and Visa challenge to the UK's interchange fee cap. Thank you for joining us at Fintech's Fair Play, where we bring you in-depth analysis of the most significant developments in the financial technology sector. If you found this analysis valuable, please subscribe to our channel for more insights into the evolving world of fintech. Until next time, this is Fintech's Fair Play, keeping an eye on the financial industry so you don't have to.